Hello everyone. We mm, Hello everyone. I'm Shekhar Malawat with our team members Elviro, Shivam, and Devendi. Today we are going to talk about term sheet. Term sheet is basically a kind of documents where we'll be having all the rules and regulation and the general guidelines to invest before investing in a stock market or in a particular stock. Now moving on to the next slide. Yeah, what will be our financial goals? We will be investing in a Investopedia platform with a hypothetical money of $500,000. What will be our goals is our target goal is to outperform the S&P 500 with a minimum of 5% gain. But if in a worst case scenario, we like to get a return on investment of around 10%. Now moving on to the next slide, when we look our investment policy statement, when we going to the risk tolerance profile, it is one of the major before we invest in a particular thing or go invest anywhere in the world. It should be on a person preference how much risk the person can bear. So on our group preference, our risk tolerance profile is moderate and above average. So our investment style will be like we will be diversifying our portfolio through different sectors rather than consider on a particular sector. So the benefit will be we will be if the particular sector is gaining loss or losing money, then we can gain money from the other sectors. The other approach is top down approach. We will be using a top down approach where we'll be doing the market analysis on a economic level before we make any final decision. The next is momentum strategy, in which we will be investing on a short duration period, maybe for 1 day or 1 week, having a general overview of the current market scenario. We will be investing in a company that is going up and then taking out the money when the graph starts to decline. Now I ask my friend to Shivam to take over.
Thank you, Shekhar. The limitation and the restriction. There are five different parts. The represent. First one is each purchase stock need to the represent at least the 1% of the portfolio. The second one is the consistent. The portfolio will be consist only of the stocks. The third one is the need. There need to be at least the two company consider as a consumer discretion stocks. The fourth one is the have the allocation need to have at least the three different industrial. The last one is the consider. The portfolio will be consider only companies from Canada and the United States. Second slide, please. This one is the regulation. The first one is the legal consideration. There are three different parts, three different points. The company with the securities law and the regulation. The second one is the use the license and the reputable background account. The last one is the understand corporative governments parties. The second one is the tax consideration. The first one is the capital gains tax on the profit from the selling stocks. Second one is the tax rates based on income level, holding a period, and the local tax law. The last one is the consideration from the short terms versus long term capital gains. The next slide, go to the Alvaro.
Thank you, Shubham. Now let's focus on fundamental analysis. Here we're going to see four important macroeconomic variables in Canada and the United States. The first two are GDP growth and unemployment, that for both countries are according to the historical data, so they are in a normal level. Also, the forecast for these two variables are almost the same for the current results. Then we have inflation and interest rates that in both countries have been changing a lot. In the last month, both variable has been increasing. In the case of Canada and United States, this is no a normal scenario. This is more like a recession scenario for both countries. The increasing in inflation also leads to an increase in the interest rates in 2023. Since the last results from Bank of Canada, they decide to increase this rate from 4.5% to 4.75%. Also, the same happens in the United States. However, for the next year, they are expecting to see a decrease in the inflation rate in both countries and also a little decrease in the interest rates. Now let's see the industry and stock analysis. Here we can see all the companies that are going to be in a portfolio. And the first company is Tesla with an annual standard deviation of 62.25% and an average annual return of 78.38%. There are really high in both cases. So Tesla's having high volatility in the prices, but they having also a high return, which is common for in this case. Then we have Arista Networks. Also, we have high volatility, but a low average annual return. When we have Rogers with a volatility of 25% and a very low annual return. And then we have Amazon with a volatility of 36% and an annual return of 14%. Then Microsoft with a standard deviation of 31 and another return of 29. Then we have Toyota, CIBC, and Johnson & Johnson that have a standard deviation really high comparing to the annual return. This means that our industries that we're going to consider are for the discretionary industry, telecommunications, technology, financial, and healthcare. Now we see here some price comparable ratios. The more relevant are the price to earnings, that we see that Amazon is having a really high price to earning ratio. Also profit margin and operating margin. In the case of Amazon, this margin is really low, which means that the company is having a lot of cost of expenses. Lastly, we see the current ratio. In this case, the company with the highest current ratio is Arista Networks, which means that Arista Networks is having a really low current liabilities, which means that this company is having a really low short-term debt. Now let's see the allocation. In the allocation of the company, we use the function solver in Excel to maximize the Sharpe ratio that we are going to see in the next slices. Here, the allocation for companies goes 45% to Tesla and 47% to Microsoft, and then the rest percentage goes among all the other companies. About the industry allocation, we see that consumer discretionary has 47% and technology 48%, which goes according to our analysis, that we see that Canada and United States are now in a recession scenario that potentially is going to a recovery scenario in the next years, and these both industries are the best options to invest in these scenarios. Now let's continue with Wendy.
Thank you, Alvaro. I'm going to discuss some exciting investment opportunity with you. Our portfolio will include some of the most innovative and influential players in their respective industries. Let's dive into our recommendation. First, Tesla. With its cutting-edge self-driving and battery manufacturing technologies, Tesla has established itself as a leader in the electric vehicle market. Its self-driving capability and advanced battery technology gives Tesla a significant edge over its rival. Next, we have Arista Network. The company is experiencing a growing demand for cloud computing, which is expected to continue with the foreseeable future. Moving on, the Rogers Communication is a company that has made wise investment in the key technologies such as 5G and artificial intelligence. With the widespread adoption of 5G technology and the increased importance of AI, Rogers is well positioned to capitalize on those trends. Next one is Toyota. It is another company worth considering with its eminent introduce of advanced technology such as self-driving machines and fuel cells that generate hydrogen. Those advancements have the potential to revolutionize the automobile industry. As a global leader in this industry, Toyota's investment in those areas can improve significant long-term growth opportunity. Next slide, please. Now let's turn our attention to Amazon. As a growing e-commerce giant, Amazon has significant presence in international market. It is dominant in online retail, cloud computing, and other emerging sectors make it combining investment option with its strong position and continue expanding a new markets. Amazon is positioned for the growth and market shares gain. Um, Next one is Microsoft, a tech powerhouse, deserve our attention due to the heavy investment in research and development. The company focus on artificial intelligence, augmented reality, and quantum computer reflects its commitment to innovative and steering ahead the curve. The next one is CIBC, one of the largest bank in Canada, is a leading and well diversified North American financial institute. Lastly, we have Johnson & Johnson, a company known for its strong sustainability business practice and commitment to innovation. It is diversified product portfolio and a global reach make it complement investment opportunity in the healthcare industry. Moving on to the next slide. Um, Now let's discuss on expected portfolio performance. We have chosen to indicate the SPDR S&P 500 ETF trust in our portfolio. The SPY is an exchange trade fund that aim to replicate the performance of the S&P 500 index, which consists of 500 leading companies in the US. By including this ETF, we can gain exposure to overcome performance of the US stock market, providing diversification and stability to our portfolio. In conclusion, by investing in those companies at the forefront of technological advancement and with a strong growth potential, we aim to create diversified portfolio that combine stability, innovation, and potential for long-term growth. This strategy allows us to position ourselves for success in the ever-changing investment landscape. This is the end of our presentation. Thank you.